Welcome, you're watching the NWR Resources Conference. It is November 2020. On the line, we have Montem Resources. Montem Resources is a steelmaking coal development company operating in the Crowsnest Pass district in southern Alberta, Canada. The company is planning an integrated mining complex in the Crowsnest Pass, focusing on low-cost development of open-cut mines that leverage central infrastructure. The first component of this objective is to re-establish mining at the Tent Mountain mine. Montem completed a definitive feasibility study on the Tent Mountain mine in 2020. The DFS is providing guidance for the restart project with the aim to be exporting coal in 2022. Montem has a large pipeline of development assets centered around the Chinook Project. The Chinook Project covers historical mines that previously exported hard coking coal to Japanese steel mills. The Chinook Project has the potential to produce multiple open-cut, hard coking coal mines, and the company plans to explore, define, and develop these mines. On the line, we have Managing Director and CEO, Peter Doyle. Peter has more than 25 years of coal mining experience. He has worked in roles in exploration, planning, development, production, and management in the coal mining industry, as well as having spent the first decade of his career working at coal mines in the Hunter Valley. Peter has worked in project development, marketing, and management in the coal industries of China, the US, Mongolia, Russia, and Europe. And he has been involved in successful greenfield and brownfield coal mine developments, as well as managed coal mines selling to export metallurgical markets. Over to you, Peter, with your presentation.
All right, thanks very much, Laura. What a mouthful. Well, thank you all for logging in and being here today, and thanks very much to NWR and Nathan Ryan for organising this. I'm based in Canada. It's mid-afternoon here, and thanks very much everyone for getting up. Look, Montem Resources is recently listed on the ASX. We're very excited to bring our company to public markets. The company formed in 2016 and has been working towards that listing for some time, investing in our steelmaking coal assets. And I'm going to do a relatively short presentation today and hopefully can tell you about the company and explain to you why we think it's a very good value proposition here at the moment. This opening slide is a photograph of our mine, the Tent Mountain mine that we are seeking to re-establish mining. And it's based right in the heartland of coking coal production in Canada. This slide is our disclaimer. Please read it. We attest that everything we write down and say to you is accurate as far as we know. There are forward-looking statements, and please read these cautionary statements as well as the disclaimers at the back of the presentation. As I said before, Montem is recently listed on the ASX on September 15. We have just over 202 million shares on issue. Our share price recently was 18 cents, which gives us a market capitalization of $36 million. We have just over $7 million cash at the start of October. And that pie chart there shows our major shareholders. All employees and the board hold shares in the company of approximately 14%. Regal Funds Management have been a shareholder since we were an unlisted public company in Australia in 2017. They hold just short of 22% of the stock. Ilwella is the company owned by the Flannery family. The Flannery is quite well known in the coal industry in Australia and globally. And we also have private investors, M&A in Sydney. And there's 46% of the stock is held by the general market. I'll just quickly talk about the board of directors and who's involved in the governance and the directional management of the company. Mark Lochtenberg is our chairman. Mark is quite well known again in the coal industry and in public markets in Australia. He's had quite a storied history of work in these markets. He's the former co-head of Glencore Coal, which formed Xstrata and then became, a major significant participant in the global coal market. Rob Tyndall was one of the founders of the company, or the founding chairman and executive director of the company. Rob's been involved from the outset in 2016 and provides great knowledge of investing and development of mining companies. Susie Henderson is independent director. Susie's been in the coal industry in Australia for many, many years, working in the infrastructure area. She was previously the head of government relations and infrastructure at MacArthur Coal. And Will Suter, also an independent director, is a very well-known investment banker in the resources space in Australia. I'd like to now briefly introduce the strategy of Montem and what it is that we're doing. The map on the right-hand side shows a little inset of where we're located in Canada. This is the heartbeat of coking coal production in Canada, and Canada is indeed the third largest producer of export coking coal on the seaborne market. We have a three-pronged strategy, I suppose, or three classes of assets at Montem. The first being the Tent Mountain mine. The Tent Mountain open cut mine is permitted. We have environmental approvals, and it was a mine that was shut down in the 1980s due to market conditions. At that time, it was selling 100% of its hard coking coal to Japanese steel mills. We have worked pretty hard over the last 3 years to bring our knowledge of this asset up to a modern standard. We've completed an environmental impact assessment. We've completed a definitive feasibility study. And we're in the last phase. In fact, I signed it earlier today of our application or our applications to the provincial government to restart the mine. We expect that to take around about 12 months for the government to assess these applications. There's quite a few of them, and to get us up to the line and a final green light to restart production. And we expect to be exporting coal from Tent Mountain in 2022. We've got all the attributes, and I'll go through the asset a bit more in a little while to allow that to happen. It's just the final phase is getting the green light from the provincial government. Our strategy, as I said before, on these classes of assets is to bring the cash flow from Tent Mountain and invest it in our much larger development pipeline that's centered around the Chinook Project. The Chinook Project is currently just finished our phase 1 of exploration at Chinook Vicary, which had really exciting results. The Chinook Project has the potential to produce multiple large-scale open-cut mines, and it's comparable in tenure and coal quality to the neighbouring Atfam Coal's Eland Project and Hancock's Grassy Mountain Project and Teck's Elk Valley Complex. And finally, we've got a huge asset base to the north of the Chinook Project, with the potential of an exploration target across all our projects of over 1.5 billion tonnes, which is a stunning number for coking coal. All of these are shallow, open-cut deposits. They're well known to the Geological Society of Canada. They have been produced from before, but historically this area has just sat really dormant for the last few decades whilst it was waiting for investment. I'll just talk very briefly about this map on slide 6. Our assets are highlighted in yellow and purple, the dark purple being where we have a JORC resource declared, the light purple an exploration target. To the west of us are the mines of the Elk Valley. Teck Resources produces 25 million tonnes here. This is the Tent Mountain mine in the south of the map. And then in the middle of the map is the Chinook Project, and to the north of that, our exploration projects. And to the east of us are the assets of the Attram Coal, Eland's project, and Hancock's Grassy Mountain project. The area is rich in history of mining and also with infrastructure. There's a railway line that runs straight through the middle of our projects to the port. We've already secured port capacity. We have power, we have water, and I guess most importantly, we've got a willing local community and local workforce. We finished a definitive feasibility study on Tent Mountain earlier this year. It has compelling economics. This is a mine halfway through its life. Existing infrastructure on site is access to rail, access to highway, access to power. The open cut mine there will produce just over 1 million tonnes per annum for 14 years. The cash cost down here in the global cash cost curve, we would be making money today in the coal markets if we were selling coal from Tent Mountain. In fact, we'd be making really good money from Canada, and I'll go into that in a little while. But we're very happy about our cash cost position in the middle of the cost curve, and we're slightly below the middle of the cost curve up here on capital intensity. It is a low capital cost, fast restart for mining. Probably let you go through this slide yourselves, but we've completed a lot of work over 3 years, really investing heavily in understanding Tent Mountain and making sure that we design the best possible mine there. We are submitting the application, as I said, before the end of this year, and we expect to do preliminary construction in 2021, and the major construction in the winter of 2021-22, and be producing coal in 2022. As I said before, our second asset is the world-class Chinook project. It's a large project that stretches over 40 kilometres from the south to the north. It has a huge potential for multiple large-scale mines. It is adjacent to Hancock's Grassy Mountain project and Attram's Eland projects. We have 150, or just short of 150 million tonnes of existing coal resources under JORC, with an exploration target of between 190 and 575 additional tonnes to the 150 that are already established. There were 3 mines on this project. We're exploring in an area known as Chinook Vicary. We just completed this exploration 2 weeks ago. We're really excited by the results. We found coal seams that on average were 22 metres thick. It's right next door to Hancock's Grassy Mountain project and Attram's, as I said. The drilling confirmed the occurrence of these structurally thickened zones, which are common in this area. And it allows for the potential for very economical open cut mining. Our project, the Vicary project, where we're focusing our effort, is 15 kilometres from the railway line, which is really quite close. And as I said before, it was previously mined, and that coal was sold as a premium hard coking coal to the Japanese steelmakers. Moving beyond Chinook, we have, as I said at the beginning, a large exploration, Greenfield's exploration assets. We have three main assets. One is Forstack, which is north of Chinook, and most recently we sent some geologists up and did some early stage work on the Isola project. And Isola is adjacent to the large area to the south of us being explored by other explorers, and they're finding great results up there. And it has an exploration target put over it of between 275 million tonnes and 900 million tonnes, which obviously is potentially world-class scale. And we look forward to exploring that in 2021 and 2022 and bringing those results to market. I'd just like to now step away from talking about Montem and talk about the coal market very briefly. It's an interesting time for coking coal, with Australia, the #1 producer of export coking coal to seaborne markets, really suffering at the hands of markets that are uncertain. Just something to point out, the long-term or the 10-year historical price average for hard coking coal is $180. We base all our economics on a long-term forecast of $150 a tonne, which we use to be conservative. And interestingly, right now, the Canadian coal exporters are receiving a $30 per tonne premium to the Australian producers. I'll get to the finish of this and we can have a Q&A session pretty shortly. Just some of the things that we've got coming up. We were very pleased to raise $8 million at our IPO, and we're investing that money in our projects. We have just completed the exploration at Chinook, and it shows great results, and we'll bring the final coal quality results to the market very soon. We're also doing an update of our concept mining study. The initial study showed the potential for multiple large open cut mines, and we expect the combination of the new drilling, the new coal quality results, and the new engineering study to be very, very compelling. And at Tent Mountain, as I said, I signed the first submission to the AER today. The optimization of the definitive feasibility study is being undertaken and will be completed next year. We were also entering the market quite aggressively to try and attract joint venture partners at Tent Mountain to alleviate the need to go back to equity markets and dilute shareholders. And we completed the first phase of the West Shore reservation fee, so we've locked in port capacity for the Tent Mountain mine. So just wrapping up, why Montem? Well, quite simply, we offer great value. We have near-term production at Tent Mountain. The mine itself should produce an EBITDA of around 65 million Australian per annum, and we should be cash flow positive in 2022 at Tent Mountain. There's just really not that many steps to go before that production begins. And we're extremely excited about that. And we think that we have a compelling strategy of really starting with a modest size operation and using the profits from that to invest in our already exciting pipeline of assets at Chinook. We believe that the recovery from COVID will be led by infrastructure, and that there will be increasing steel and coking coal demand. In fact, steel margins right now are very, very good. And the likelihood of the two-tiered system of pricing in the Pacific is not likely to last because the Chinese steel manufacturers just won't suffer that kind of damage to their profit line. Our coal is hard coking coal. It has been exported to Japan before, and we believe that it will be again to Japan. And finally, the team undertaking the management and governance of Montem Resources is very, very, very experienced in coal mining and public market development. So that's all from me. There is a final slide here on our resource and reserves for those who would like to look at it, and our CP statement. But thanks very much to NWR, and Laura, I'm happy to get
so much, Peter.
questions.
That was great. Got a couple of questions for you. So you recently announced initial results from drilling at Chinook Vicary. How did these compare with your expectations?
Oh, they're better than we expected. Not a lot better. We knew there was a lot of coal there. There's over 3 mines mined there over a very long life of those mines in the 1900s, and we expected to find big thick coal seams, but not at 22 metres thick on average. That was pretty exciting. So yeah, we're very excited by it. We are waiting with great anticipation for the coal quality results, which are going to start dribbling in December and be finalised in early January.
And can you provide an update on how permitting for the Tent Mountain mine is progressing?
Yep, very well. It is also at an exciting stage. As I said before, I signed the first submission today. That's several hundred pages to go into the regulator. Very importantly for the permitting, and it is a difficult thing to understand from the layman's perspective, but Tent Mountain never stopped being a coal mine. It's a mine halfway through its life, and that gives us a great advantage. It has an environmental permit and it has a mine permit. We have to amend those permits to an active status. We undertook 3 years of work to get to where we are today, and we're putting that application into government over the next couple of weeks, probably in late December, and we expect the government to turn that around within 12 months. So at the end of, toward the end of 2021, we expect to be fully licensed to operate the mine.
So that they're the next steps, I suppose, to restart production there. Things will kind of kick off in the next weeks. Yeah. Great. And company
with construction in.
Sorry, no, go for it.
Go on. No, I was just going to talk about the fact that we own the land at Tent Mountain Mine, or a lot of the land, and we expect to begin some early works there next summer just to get prepared for construction.
And clearly the company only listed on the ASX in September. How do you rate the company's performance since the listing?
Oh, look, Laura, we honestly, we're pretty disappointed, but the backdrop for coal is pretty hard, hard coking coal. It's been splashed all over the front page of various papers in Australia about the lack of buying from the Chinese, and whether or not that's some sort of mandated political thing or not. The fact is that the Canadians are getting $30 a tonne more than the Australian counterparts at the moment. That's very unusual. So we don't think that's factored into our share price whatsoever. And, we think that we're vastly undervalued. With a market capitalisation of around $40 million against our peers, I think for smart investors, Montem offers incredibly good value right now. And we urge people to do that comparison to our peers and enjoy the upside, which will no doubt come as we hit our milestones, which we're doing right now.
So clearly, as you said, the macroclimate has been pretty tough over the last 6 months or so in relations with China. How do you see that panning out, say, over the near term? What are your, say, base case scenarios for that?
Oh, look, we're bulls on coking coal. We have been for a long time. The various executives of this company and senior management in Bob Bell, who used to run all of Teck Coal's marketing and logistics, are pretty well versed in coking coal markets. Mark Lochtenberg and I previously exported met coal to Japan and Korea. Look, we believe that long-term hard coking coal is an undeniable win on the basis that it's dwindling in its occurrence around the world. You cannot have the scale of steel making production that we do globally without hard coking coal. There is no substitute. We believe that the Chinese steel margins, the steel producers, won't continue to buy overpriced hard coking coal, and that they will return to a normal, in some description, market in January, February is our look. And look, moreover, we see a 10-year average at $180 a tonne as the normal. That's what we believe is the normal. You have peaks and troughs in this market, and they're exciting to ride. And we strongly believe that another peak is not that far away.
We'll leave it there. Maybe that's a good point to end on. Thank you so much for joining us today, Peter.
Well, thanks very much, Laura, and thanks very much to NWR Communications. If anybody's got any other questions, please feel free to give me a call or email me.
Thanks, Peter. Have a great day.